For those who don't know, MACD is a simple indicator that's looking for trend continuation. And here's just an example that I brought up of the Shiba Inu chart here. We want to, we're buying as the MACD is crossing here after a whole bunch of conditions are met. And then we are selling when the MACD crosses back down or when it closes below a short-term moving average. You can see kind of what happens here on this particular chart, where just like the other momentum strategy in crypto, I find that, there are short periods of time in which crypto really experiences explosive momentum, and you want to make sure you have a system for that. And then the rest of the time, you're just kind of getting dinged and stopped out, waiting for that next system to give way. And then if you combine those two, you end up getting this particular strategy. So again, what we're looking for on this chart is the gray shaded area is the combination of the other two strategies. So assuming you're splitting your money equally into each strategy, and this is actually working perfectly to me. So the gray area is the two combined strategies. And you can see there's no really extreme dips. There's no incredibly losing years. So that makes it easier to adhere to, because we're not maximizing necessarily for absolute return. We're understanding that we're human beings. So we are optimizing for a smoother equity curve that will be able to kind of stay in the game and stay trading these systems. But this crisscrossing of these two is also what you want. However, it is very, very and vitally important that you do these steps before you commit a lot of capital.